Hi everyone, it's Evan here from the Trade Risk on Friday, September 22nd, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Hope everybody's having a fantastic day. It's Friday, the weekend is here. It was a pretty boring week out there in markets. Certainly when looking at the S&P 500, virtually no change. There was clearly some more movement underneath the hood that we will address. And it really depended what sectors you were allocated to this week on whether or not you sort of outperformed or underperformed. I think there was a pretty good stark difference between certain sectors. We're going to cover all of that later in the video when we get into sectors. And I think that's it. I don't think I have anything else to add at the beginning of this. So let's jump into it here with the S&P 500. And again, we're still looking at the cash market just for that ex-dividend skew, which is still a little recent on the charts. So here's the S&P 500. Here's how we finished the week. It was up just 1.5 points here on Friday. And you can see if we go to a weekly chart first, just marginally up, basically up that same amount on the week. So you can see virtually no movement, made a little bit of progress to the upside, a little bit lower, and then just ended exactly where we started the week, but a very, very narrow ranged week here in the S&P 500. So, a lot of the comments that we talked about in Wednesday's video that was just 2 sessions ago, nothing really has changed. We're still looking at this market as bulls being in control based on trend along multiple time frames. You can see we're getting a little bit sluggish here. I would argue that momentum is weakening now. So one of our sort of 3 factors that I personally like to look at to address market context and health: trend, momentum, breadth. Momentum starting to weaken here a bit in the S&P 500. But again, still very mild and completely in the range of normal here for traditional markets. Digesting after a pretty good move to the upside. Now, I still think that this is a tough period seasonality-wise. The last week of September, the last couple, 10 days of September, historically are not that favorable for bulls. And I think that coincides nicely with pretty much, a straight line move higher for the past 5 or so weeks in the S&P 500, 4 weeks, 5 weeks or so in the S&P 500. So coming into the end of September, stalling out here, digesting some of this move from 2420 all the way to nearly 2520, so almost 100 handles here in the S&P 500 cash. I think it's completely reasonable to sort of move sideways, perhaps continue to pull back to this 2490 level, or even retest this larger breakout. Again, not saying that has to happen. I think more sideways is potentially very much in the cards. And if the S&P 500 certainly wants to stick with trend, I'm not surprised there either. So really kind of a hands-off approach, not looking to get too involved here. Volatility is extremely low. Let the chop kind of work itself out. I mean, this is the type of market where I am very grateful that I am an end-of-day swing trader. I'm only taking signals during the last 30 minutes of the trading session. Otherwise, staring at these markets with virtually no movement would be pretty painful all day. So that's the scoop here in the S&P 500. I think, again, you're seeing momentum weaken a little bit. When we get into the individual sectors, I think that's where the more interesting conversation is right now. If we look at the Russell 2000, the small cap index, we got new daily closing highs here, so that's very impressive. Again, you can see just a remarkable run from the lows in August all the way up to where we sit today at new highs here. Is effectively a straight line, only a little kind of a cluster pullback here for 3 or 4 days, and it's been off to the races, basically marching higher and advancing every single day. You can see momentum still accelerating here in the small caps. 8 period is kind of extending away from that 20 period moving average here. So again, is this a spot to chase? Probably not. But again, I would not necessarily want to fight this either, just given the momentum behind this set of stocks right now. So again, I think very much in control, 1.3% to the upside versus the S&P 500, which was flat on the week. So you can clearly see here's where some of the outperformance came from this week. And where did the underperformance come from? It was the NASDAQ 100. You can see down 1.2%. So you had a 1.2% down NASDAQ, you had a plus 1.3% small caps, and you had a flat S&P 500. So let's drill down here on the NASDAQ 100. You can see we did finish the week slightly off of the lows, but effectively at the lows of the week. We talked about this narrative on Wednesday, pointing out that the NASDAQ was lagging, is beginning to show more signs of lagging. It did not make new highs with the S&P 500 and now with the Russell 2000 here recently. We talked about the volume pattern that has been in place here with signs of distribution all the way from June of last year. And if we look, not of last year, of several months ago, but if we look at where the highs were in June here, where we first started to see this uptick in sell volume, look at where we are today. We're effectively, 50 cents above that price. So with this increase in sell volume on these down days, signaling potentially distribution and potentially an even bigger topping pattern here, there is some concern about the NASDAQ 100. Once again, I do not think this is an easy short. If we look at the weekly time frame, this thing is in a very kind of structural uptrend here. Again, that volume shows itself on that weekly chart, but I think the signs of caution or something is kind of going on here. There's that underperformance versus the S&P 500 and the IWM that I think if you wanted to hedge your portfolio, for example, this is sort of the market index I would look at, or the group of stocks we would look at. But you have to remember, again, you think about some of the large cap components that make this up, with Apple, for example, which had a really lousy week, kind of shedding market cap here. I know, again, this is, given the size of it, is what makes this so impactful. But even though it only went from 162, it's a 10-point move on a $150 stock, doesn't sound crazy. But when it's an $800 billion stock, that has quite the effect here on the Qs. So again, if you're in the belief, if you're in the camp that Apple is due for a little bit of a snapback here, maybe it filled this gap and it's ready for a rebound, that's why I think you need to be careful here. And it's not necessarily an easy short, because the Qs, for all we know, if Apple has a nice day and Facebook, Google, it takes only 3 or 4 of those huge companies that make up a good component here, a percentage here, to really snap this Qs back, and very quickly could be at highs. So again, note the underperformance in the Qs. If I were looking at short exposure, I would still definitely consider this index, but I would not want to go out there and aggressively short this. Certainly not in my style or interest as of right now, but something to pay attention to. So hopefully that hopefully that kind of makes it clear here. I think we're going into that soft patch. We've had a nice run. We do have the IWM, which just made new highs, but it went basically completely vertical for an entire month to get there. The S&P 500 losing a little momentum. I'm of the belief, we could just be in for a little bit of at least a soft patch here heading into the end of September. I'm still position long, locked in some profits towards basically Friday. Member subscribers and I locked in some profits in some positions that we have, but we're still very much on the net long side. So that's the market environment overall. Let's take a look at some of the other major markets here. TLT, actually fairly resilient here into the end of the week. It was down 0.5%, but take a look here at some of the bottoming tail here. You could see dip buyers maybe stepping in, selling, drying up just a bit here under this 126 level. I think that's interesting. It's still pretty much in an void spot for me. I think in the midweek video I said I'd really want to see this back above 127. That would get me much more optimistic, or at least neutral on bonds right here. I still think you need to be careful. It still is in a vulnerable sort of pattern after breaking this trend line on some higher volume and sitting below some of these fast moving averages. But it is notable that this didn't completely roll over into the end of the week. So something to pay attention to. To me, it just needs more time. Nothing that I'm willing to really address or take a trade on at this point. GLD, a little bit of a bounce back here on Friday. We discussed this Wednesday saying, gold had a great 2-month run from the beginning of July into September, and a little bit of a pullback here isn't unreasonable. If this keeps pulling back at the rate that it has been without slowing down at all, that is going to be a little bit of a concern. I've been looking at this as potentially an optimistic looking pullback. It is sort of lasting and potentially moving at a fairly fast rate, which is making me reconsider that bullish pullback thesis. But I think if if Thursday was a low and we can start to levitate back up to this, 124, 125 range, then I think, gold is in a decent spot of potential stabilization. No outright position in this just now, just sort of watching it here into next week. Silver, kind of a similar situation. If you go back here, you could arguably call this a failed breakout here of this trend line. This thing's not very precisely drawn, and you probably, I don't know if XLV is the best way to express this trend line. So you could call this a failed breakout. That's fine. It's below the 8 and 20 period. It did have that nice run up in July. It's not hasn't been as pretty as gold to me in my mind. So silver is still kind of suspect here. I'm much less interested in silver than I would be in GLD. If we go to USO next, you could see still hanging out near these highs, really resilient into the end of the week, not giving much movement one way or the other. This type of compression is probably going to lead to some expansion here early next week. If we go to that weekly chart, you can see just closed up 4 cents here in the ETF right at last week's close, last week's highs, and just holding high and tight as the 8 and 20 period catch up. So I'm interested in USO. I'm sort of interested in this as a potential breakout continuation long, but the time it's taking here is really looking at it more on this day, and then the way it failed and kind of is just moving sideways here. I'm kind of more hands-off and just watching this, but I'd like to see what it does. Again, I think the more time it can spend above 10 and base out in a sort of healthy fashion up here, it has my interest. So that's USO. Natural gas, which I've also been sort of excited about here on the potential long side for this to be a bottoming pattern, had a horrible Thursday, down 4%, coming back into this old range here on higher volume. I still believe this could be bottoming out, just going to take quite a bit longer here as it failed these highs and now has to sort of recoup itself down here. So UNG, again, we'll have to see, definitely needs more time at this point. I wanted to see it hold above 675, and you can see we came crashing down below that on Thursday. So kind of a hands-off, just waiting to see really what happens there into the end of the month. So that's a wrap up on some of the major markets. Let's take a look at the sectors. And I think, again, the sectors I think are pretty interesting here. IYT, pretty remarkable strength this week. You can see almost got new daily closing highs there, but this weekly chart up 4% and really starting to make a move here after consolidating sideways much of this year. All of this year really is finally starting to get movement to the upside. That was a good place to be this week. XLI Industrials, very similar situation here, but look at this acceleration higher, just really leaving behind all of these previous highs here. So Industrials got a nice bid today. Energy, or this week. Energy, same thing. This isn't a new discussion here. We've been talking about XLE for a while now, and this continues to work. Look at the just steady kind of green volume that you see kind of coming in here. So energy continued to work. Materials continued to work. A little bit of fade there at the end of the week, but still trading at highs. And financials, right back to those highs, had a 2.6% up week. Those were all the real bright spots of the market this week, and there's quite a bit of them. That's 5 sectors we just talked about that had some great weeks. But on the downside, you're going to look at staples, which had a 2.3% down week, breaking below some significant support here at 54.50. That has been holding. Volume wasn't all that impressive, but this move lower and this closed on the dead lows is certainly a bit concerning there for the staples. Utilities also down 2.78% this week. You can see higher volume coming in. This retracement a little bit more meaningful, especially given the fact that we just had a pretty good move lower here or pullback in June to already be experiencing another one. So XLU, XLP, that's a concern. Anything rate sensitive, so the real estate index here, IYR, coming back down potentially to this trend line here. Also healthcare, which is traditionally seen as more defensive area of the market, was down 1.2%. I like XLV on this potential pullback. I'm optimistic on this pullback as more of an opportunity. But still, again, it lagged on the week, starting to catch its breath here towards the end of the week. And then XLK to an extent, which is just a little bit weak here, down 37 basis points on the week, but you can see finishing near the lows. So it's a very split market. One could argue, though, that everything that lagged is defensive in nature or tied to rate sensitive areas. So that could be very bullish on that sort of risk appetite spectrum when you have small caps making new highs and staples pulling back, utilities pulling back, that type of thing. So that's sort of the sector breakdown. And I think that speaks to, depending on where you were, I think looking at just the weekly returns here of the small caps up 1.3%, and then the Qs down effectively 3%. You can really see the split nature of this market. But again, just because the Qs are going to roll over here, we do have some decent leadership picking up picking up the slack here from potentially tech and maybe biotech, which is sprinkled in here. So that's the recap overall. Hopefully you guys had a good week. Thanks for watching. If you haven't subscribed to our YouTube channel, please do so. Keep you up to date with all those latest videos that we post if you like them. And I think that's it. So thanks for watching, and talk to you guys again soon.